Hello and welcome to the weekly wraps. This one has been a bit of a busier one in the marketplace. So just in terms of some of the main focuses, one of the main things that people have been looking at this week is of course the negotiations between Greece and the EU. So at the start of the week it did appear that the two sides were very much far apart in terms of the negotiation process, with all eyes very much on Wednesday with that Eurogroup meeting. However, as Wednesday did progress, it became more and more apparent that the two sides weren't necessarily going to be able to reach a compromise on that day, and this was later then formally announced. And what the main concerns of markets was they couldn't even agree on a joint statement at the time as well, so subsequently did hamper some of the investors' sentiment. However, heading into the final stages of the week, there have been some more relatively upbeat comments suggesting that two sides are aiming to reach some form of compromise, with the next key date for your diaries being February the 16th, where the next meeting will take place. So markets did also shrug some relatively downbeat comments from EU's Younger, who said the two sides do remain still very far apart. But nonetheless, the DAX did break above 11,000 for the first time, with the E-mini S&P printing a record high, and this was also allied with some of the positive sentiments stemming from the geopolitical front, where we did see that Ukraine ceasefire deal that has been made. That's due to be implemented on Sunday the 15th of February. And also we have seen a continued climb in energy prices, which has also helped support some of the world's largest energy names. But just from a central bank perspective, this week also saw the release of the Bank of England's quarterly inflation report, so actually had a more hawkish than expected tone. So just in terms of some of the findings, the BOE did warn that the UK's CPI could actually dip below 0% at some point this year. However, they did say the rate at which UK inflation could return back to 2% could potentially be quicker than initially forecast. And in terms of their forecast, they did also upgrade their wage and economic growth forecasts, as well as stating they expect slack in the economy to be absorbed at a faster rate than as said in their November report. One of the potentially interesting things from the report was they did say that rates could actually be cut if inflationary concerns continue to weigh. However, Carney did very much downplay this during the Q&A session, whereby he did say that he would expect rates to rise rather than fall. And elsewhere, in terms of central bank events, we saw the Riksbank come to market with their latest policy decision. So they went against the grain of market consensus, and they cut their key repo rate by 10 basis points. So that's now minus 0.1%, as well as they also unveiled their own QE programme of 10 billion Swedish crowns. And elsewhere, we did also see some BOJ sources which saw a move lower in dollar yen of around about 150 pips in a fast money move, with the sources saying the BOJ are happy to stand pat on existing measures, saying any additional measures could actually be more counterproductive. Other than that, that's all from me, and I hope everyone has a fantastic weekend.